Welcome to the Capital News. I am your host, Alex Koritis. Today is Tuesday, September 8th, 2020. Thank you so much for joining me. The title of today's podcast is Election Day Coming Soon. We are only a couple months away. This is not going to be so much a political commentary, but more or less just a recap of what we have been covering over the past several weeks and months, and what is likely going to continue and still hang over the election for the remaining 2 months until we hit that election day of November 3rd. And of course, there could be a whole slew of other issues that come down the pike because this is the year 2020 and it ain't over. First, though, I want to talk about market performance because, again, another doozy across the board amongst the major averages being led lower by the NASDAQ. Like we always say here, what leads up leads down. Nothing goes straight up. Nothing goes straight down. This could very much be an overextended and overbought stock market that is simply taking a breather. This is just a little sigh of relief. Deep breath. We had to give some back. Hyper bubble mania territory. And this is just a natural pullback in this process to ever new heights. That is very much a possibility. Why? Because Election Day is coming soon. And Thunder Thumbs is fascinated with and loves the stock market. And Thunder Thumbs, through the Nobody Cares Act, in conjunction with the Treasury Department, which of course he oversees, created special purpose vehicles, SPVs, that allows the Treasury to work hand in glove with the Federal Reserve to go out and circumvent the Federal Reserve's charter that allows them to say, oh, do we need to buy the corporate debt of the world's, and I stress the word world, not just U.S. corporations, but the world's largest corporations, we can go out and buy their corporate debt. Ah, yes, I think that's what we have to do. And that's what they did. Of course, that's not what they should have done. It's not what they should be doing, but you have to understand the name of the game. You have to understand the rules of the game. You have to understand that 90% of financial assets are owned by 10% of the population in this country, and it's even more concentrated at the top 1% and the top 1% of the top 1%. Understand who these jokers are working for. They do not care about you. But nonetheless, through the Nobody Cares Act, Jay Powell and company at the Federal Reserve were able to turn on that Banana Republic printing press and put Banana Republic U.S. dollars into the U.S. Treasury, even though we are in the midst of economic calamity, even though we are in the midst of the greatest depression. Magically, an enormous amount of money just showed up out of nowhere into the Treasury Department's coffers. And as I just stated, Thunder Thumbs is fascinated and loves the stock market. So, if there is any further pullback into these markets that should turn into, and let's just call it an issue, you can rest assured that Thunder Thumbs and company are going to do their damnedest to get these markets back up with all of that funny money. Not because of organic growth, not because of a strong V-shaped recovery. That's a bunch of bull. That's a bunch of nonsense. We know this. We debunk this every single day. With their own statistics, by the way. You just have to look under the hood. Look past the headlines. Look past their lies and their BS. All right? This is par for the course from all politicians. I'm not just sticking it to Trump. This is all of them. But you have to wake up. So that's what they got. They got massive amounts of money in the Treasury. Use it with the Federal Reserve. And, of course, the Federal Reserve can lever this money up at a factor of 10 to 1. So willy-nilly. And if this drop-off, this sell-off in the markets should really get nasty and turn into an even bigger issue, then Thunder Thumbs might not even have to say or do anything. Jay Powell might get nervous all on his lonesome and start the printing press himself to juice these markets back up. But how many times are you going to be able to play this same game until the markets finally come to realize that there is no market and there is no bid? Meaning there is no buyer out there at these prices for stocks, for bonds, for commodities, for any financial asset. Now, of course, I think gold and silver are going to outperform all of this mania, this hyper bubble mania, but that remains to be seen. But I think that's your best bet, so look into it. This is something that we're going to pay attention to because Election Day is coming soon. Is it going to be the same song and dance? We get a pullback, Federal Reserve, federal government comes to the rescue, juices the markets, and hooray, up, 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 and away we go. Completely unsustainable, completely immoral, unethical, and as far as I'm concerned, it's illegal as well. But hey, the lawmakers made it law, so I guess it's A-okay. If they can legalize law breaking for them, for the top echelons who own the vast majority of financial assets. Now, I mean, just an aside as I'm thinking here. I mean, could you imagine if you played these games, if you had a printing press and did this, what they would do to you? But of course, if they do it, it's perfectly legal, it's perfectly fine, there's no ifs, ands, or buts about it. But you got to do it. It just makes my head spin. But that's what this podcast is all about. Uncovering these truths, revealing the men and women behind the curtain, and talking about the real system that is completely unsustainable and, again, immoral, unethical, and un-American. But hey, go out and vote. Get your sticker. Get your little sticker. Says you voted. Other things, and again, I'm going to get back to market performance, but other things that we have to keep in mind over these next couple of months, and even beyond this, because I really think with all of this kicking the can down the road, with several trillions of dollars conjured up out of thin air, with all of the spending by the federal government, by local and state governments, by what the Federal Reserve and other central banks and other governments around the world did, they did a fantastic job of kicking the can down the road. So I really think we ain't seen nothing yet when it comes to the economic fallout and calamity, and we're going to see a lot more in 2021, and it doesn't make a difference, again, who's in the White House. These things have already been set in motion by their actions, the Nobody Cares Act, the money printing, and what they were doing prior to COVID-19 too. And that is very important to stress, because they are going to use COVID-19 as an excuse, as they already have, and as they will continue to do, to justify the unjustifiable. But other things that are going to remain a cloud over the election, although it's not going to get too much coverage, at least I don't think so, are the evictions, the moratoriums, the bankruptcies and insolvencies that are waiting in the wings, and of course, the millions of underfed Americans. Now, of course, you can have some disagreements with those numbers coming out of the Census Bureau, who is conducting those surveys, claiming about 30 million Americans are underfed to some degree. Nonetheless, even if you cut that in half, it's still a significant portion of the population in what is supposed to be the greatest country in the world. That is not the greatest country in the world when you have that type of statistic. So you got these bankruptcies and insolvencies waiting in the wings. We have a massive, massive amount of zombie companies and corporations that are roaming the landscape. Again, because of the Nobody Cares Act and these emergency facilities that are being utilized by the Federal Reserve and all of their distortionary antics. This is hugely destructive to an economy. 20+% of corporations are classified as zombie companies. This is up significantly since the beginning of the year, and of course, very much significantly higher than where it was during the Great Financial Crisis. And these zombie companies exist because of quantitative easing, because of the easy credit that just allows them to sustain themselves. Never really growing, never really innovating, but just plugging along, keeping some people on the payroll, and I guess that's good enough for business. Well, it's not. It's not. And when the day of reckoning comes, what should be bankruptcies are going to turn into, unfortunately, insolvencies. Because in bankruptcy, you know what, there's enough debt there that we got to file for bankruptcy, but there's not so much where we have to claim insolvency and just have a complete liquidation event. We'll go through bankruptcy, we'll restructure, we'll negotiate with our bondholders, and we'll come back leaner and meaner. And we've learned our mistake, yada, 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 we'll come back. That's what would typically happen. I don't think that's what's typically going to happen this time. I think it's going to be worse, which means there's too much debt, they're not going to be able to renegotiate, they're not going to be able to restructure, and there's going to be a mountain of insolvencies that are waiting in the wings. And what the negative effects that this is going to have on the broader market and economy are going to be truly devastating. This is global, by the way. This isn't just here to the United States. This is going to be global. Think about the commercial real estate. Think about residential real estate. Everything. Restaurants. Local businesses, which are already getting hammered. We ain't seen nothing yet. This has just been delayed and deflected because we have thrown several $1 trillion at this problem, and there is very little to show for it. Very little to show for it. And nobody wants to ask the question, at what expense? What does this cost? What is going to happen? But that's what we do here all the time at the Capital News. So you know what's coming. It's inflation, it's stagflation, and it's hyperinflation. And again, this is not unique here to the United States. I'm talking globally. It's just a question of when and where and to what degree. So we talked also last week the jobs data. We talked yesterday about jobs data as well, which is interesting because next month, October, the first Friday of October, we will get the jobs report for the month of September, which of course we are currently in. But that will be the last official jobs report that we get prior to the election. Because election day is on November 3rd, the first Tuesday of November. You get the official jobs report on the first Friday of the month. So the election is going to take place prior to the official jobs report coming out for the month of October. Now, will ADP come out with their number? I mean, there's obviously going to be estimates and forecasts of what that number is going to be, but we're not going to get the quote-unquote official number. And again, I don't put a lot of credence in the ADP report either. So it's going to be a doozy. And I also don't think, at least at this point, now a lot can change between now and Election Day, but at this point, I do not believe that we are going to get the results as to who is the president-elect of the United States of America on the evening of November 3rd, or even late into the night, early November 4th. This is going to be contested from either side. Donald Trump is already out there saying the only way he's going to lose is if it's a rigged election, which is completely irresponsible and an extremely dangerous thing for a sitting president of the United States to say. Now, if he wins, of course, it's not rigged, evidently. That's his argument. If I win, that's exactly what was supposed to happen. If I lose, it was rigged. Now, to my Republican, conservative, Trump-supporting friends out there, I can only imagine how high your blood pressure would be boiling right now if President Obama had said this in 2012 about his re-election and Mitt Romney. I can only imagine. Rush Limbaugh, Mark Levin, Sean Hannity, they would have stroked out. But Donald Trump can say it, and it's A-OK. There's nothing wrong with it. Again, this is just further evidence, in addition to my 27 trillion pieces of evidence in my favor, showing divide and conquer, showing the system, showing how people are in their silos, showing how people are more concerned with their party, with their guy winning, as opposed to the better results for this country. Okay? You're not discussing the structural issues that are causing all of these problems that we are experiencing and witnessing and have been witnessing and experiencing for a very, very long time. Well, it's no surprise to me because people are more focused on the protests and riots in the streets, whether you have to wear a mask or not, social distance or not, what type of bean you can eat or not eat, whether a monument's going to stand or whether it's not. These can be issues. These can be discussed. But so long as you keep your eye off the ball of the main issues, then nothing is going to be solved. Nothing. And you'll be back here in another 4 years scratching your head, why aren't these things resolved? Well, because you're not paying attention. Because you're just listening and regurgitating the words that you hear from people that are saying things that you want to hear. You're falling for the trap. Wake up. Please, wake up. So that's interesting with the jobs data. We're just going to get September's jobs number in October. We won't get October's official report until after the election. So we'll see what happens there. And again, I'm still withholding judgment and from doing the analysis of the Electoral College. I want to wait until the first debate between Tweedledee and Tweedledum takes place, which is scheduled for September 29th, so in a few weeks. I believe this debate is to be hosted by Fox News anchor Chris Wallace. He also was the moderator in the third debate, I believe it was, in 2016 versus Donald Trump and Hillary Clinton. I thought Chris Wallace did the best job of all of the moderators. I expect he will do another good job in the first debate at the end of the month. We, of course, will analyze and talk about that. Now, how many issues will he bring up that we discuss here on the Capital News? He'll bring up some, but will he go after the Federal Reserve? Nobody really ever seems to. But that's something we're going to pay attention to, of course. Some other news today was COVID-19. I meant to mention this yesterday evening, but forgot to in the podcast. There was a report out by Bloomberg. I believe they were one of the first to report this, that a handful of pharmaceutical companies that are working on a COVID-19 vaccine were going to come out with a joint statement, with a joint pledge, stating that they are not going to basically fall for political gamemanship or to hit some sort of political timeline and cave to political pressures, and saying we are going to make sure that our vaccines go through rigorous testing for the efficacy and safety of this vaccine and for everybody who ends up taking it. Well, that's not Operation Warp Speed now, is it? So what changed over the weekend? What's going on here? Why the sudden change in rhetoric? You know, these pharmaceutical companies, they weren't so concerned about this a couple months ago, a few weeks ago, when any time somebody from the administration came out and said, oh yeah, we're going to have a vaccine. I mean, these guys loved the gains in their stock price so much that they sold. They took the profits. Now all of a sudden, they're saying, no, we just want to take time and, we just make sure everything's safe like you're supposed to. Again, I'm not taking this thing. I don't trust any of these idiots. I'm not taking it. And most people, now they got surveys out, most people don't want to take it either. I mean, this is common sense. If people aren't going to wear a mask or complain about wearing a mask, they're not going to put something in their body from a government program called Operation Warp Speed. Ain't happening, Jack, believe me when I tell you. And there's also another stumble in the COVID-19 vaccine space when it comes to AstraZeneca, which was one of the ones that was touted as being, oh, it's going to make it, it's going to make it. And I think they were working with the University of Oxford, if I'm not mistaken, to get out a vaccine. But this has been halted because at least one person, a test subject, has reportedly suffered some serious side effects. So AstraZeneca, their vaccine has been halted for the time being. So we'll see how that plays out. Now, because of the market sell-off, could it be that Mitch McConnell, the Senate Majority Leader, comes out today and says, oh yeah, the Senate is finally going to bring up another spending bill. In the Senate, we're going to vote on it. And of course, the Democrats come out and say, well, it's not enough. it's not enough. So the political gamesmanship continues. But isn't it something that it takes the stock market to sell off for these idiots who work for us to get together to try to do something? Even though nothing's going to get done, even though what they're going to end up doing is going to cost a lot more than what it, the costs are going to outweigh any potential benefits. Make no mistake about it. But it just shows you, again, this is the game. It's right in your face. Just so many people aren't paying attention or don't care. You want to see these clowns pass something? Let these markets go down another 5-10% and see how quick there's another spending bill on Thunder Thumb's desk and see how quick he is to sign it. So that was interesting too today. It is the month of September. Can you believe it? It has almost been a year already. This is incredibly hard to believe because I remember talking about it like it was yesterday. Month of September was when we got the repo madness. The overnight lending markets. You remember this? Overnight lending, those rates where businesses and mainly banks borrow from one another on an overnight basis is supposed to mimic, it is supposed to mirror the federal funds rate. And at that time, in the month of August, in the month of September, we were looking at about a federal funds rate at about 2%, if you can believe it. I mean, if we got to 2% today, it would completely cripple the economy. But 2%. Okay, so that's where those borrowing costs on an overnight basis should have been. There should not be much variance about that number. But there was, and there was significant variance above that number, almost getting, and I think maybe on one night, there was double-digit borrowing costs. So we're talking 10%. All right. Everybody was scratching their head. What's going on? Has there been a major bankruptcy? Has there been a major failing overnight? Is a company going down or a corporation's crumbling? What is going on here? Why is this out of control? Because you haven't seen that type of spike, that type of volatility, which again is not supposed to happen. That was not witnessed up to that point since the great financial crisis. And of course, the Federal Reserve comes out, and Jay Powell, the chairman, comes out and says, okay, everything's okay. This is just sort of a one-off with the Federal Reserve coming in to help alleviate some of these liquidity pressures that are taking place within the repo market. This is just a one-off. It's the end of the quarter. A lot of treasuries coming due. A lot of corporations need cash at the end of the quarter, yada, yada, yada. And we said, bull. Bull. They are not going to be in this market temporarily. They are going to be in this market for a very long time, and that is exactly what took place, to the point where the Federal Reserve basically became and is the overnight market, which is not supposed to be the case. But they're not supposed to be doing a lot of things that they're doing. So again, all the rules are out the window, passed into law by the idiots in Congress and signed into law by Thunder Thumbs, and everybody thinks, oh, well, okay, couple months, let's go vote for these monkeys again, and let's get another circus going here. Again, this is just beyond belief, but this is what people are going to do. That's how conditioned you are to believe that these guys are going to make a difference. They're not. They are the problem. It's on both sides. Wake up. Wake up. All right? But that's amazing, isn't it? It's already been a year. This repo madness. And despite the fact that it's been a year, this is not my forte, the overnight lending market. I've done my best to read what I can read, watch interviews of people who I believe have a better understanding of this, and nobody's been able to figure out this riddle. Only that something broke. What that something was, to what degree, nobody can really put their finger on it, but something was not working properly. And it probably, to some degree, still isn't if it wasn't for the Federal Reserve's becoming this market. Which, again, is just another slap across the face for free market capitalism. But that's where we are. So that's the repo. Now let's close off this podcast with some of that market performance. So the dollar index was rallying over the past couple of days, of course, hitting recent lows around that 92, and I think we even got below 92 briefly on the dollar index. But just for a brief history, of this over the past several months. Let's go back to where the dollar index was prior to the massive sell-off in March. So prior to that sell-off, we had the dollar index trading roughly at 100 points. Okay? When we had that massive sell-off, towards the end of March, we got down on the dollar index at 95. We then reversed drastically, which again, I still think is a possibility in this environment to sort of see and experience that swan song for the dollar. But we saw this massive counter rally in the dollar back in the month of April. And I think it probably went into, let's see. Through March, so it didn't even take that long, actually. Through March, some of April, all the way up at 102 points. That is huge in the currency markets. The dollar index is basically the dollar against a basket of currencies with a lot of the weight against the euro. But that's just some detail. The dollar then collapsed. Going back down to 98, consolidation, a leg down, consolidation, a leg down, a little bit more consolidation, retesting some of those recent lows, 92, 91, and now we're getting a little bit of a counter rally again, and we are slightly north of 93. We're actually at 93.486 on the dollar index. Now, is this the first throw into another massive leg up? Quite possibly. What might happen if that happens? Well, we could see commodity prices really start to come down significantly. We're already starting to witness that. We saw massive sell-off, several percentage points in oil. Just today alone, we have WTI trading at $36.32. Brent is at $39.40. Recall, both were north of 40 not too long ago, and Brent was near 46. Okay, so this is a huge pullback. Natural gas is trading at $2.38. Gold and silver, this is something, again, you want to watch, folks, because despite the massive sell-offs in the broad market averages, in some of the commodity space, gold and silver are holding their own. They are in a consolidation period right now. Now, if you recall, the massive sell-off that was witnessed back in March brought gold and silver down hard with it. Now, we don't know, again, if this is the start of a sell-off in the broader markets to a greater degree, or if this is just letting off some steam to the next leg up. But nonetheless, from a technical standpoint, this is pretty bullish for gold and silver because they are not dropping nearly to the same degree as some of the commodities and what's going on with the major averages in the stock market. Right now, we have gold spot trading at $1,929 an ounce. Silver spot is at $26.63. Again, that's on a technical basis. From a fundamental basis, this is a long-term bull market. Okay, there's just too many boxes that are checked off for me with my analysis. Stick with gold and silver. Uncle Sam's 10-year Treasury junk note is yielding 0.66%. Now we have some of the overnight futures trading going on right now. We got the Dow Jones Industrial Average in the green, but flat, very flat. The S&P 500 is trading up about 0.2%. The Nasdaq 100 is up about 0.6%. The cash trade in Japan is down 1.5%. A sea of red across the pond in Europe. The FTSE was down about 0.1%. Germany, France, Italy, and Spain all down greater than 1% for the day. Australian cash trade is down 2.5% at the time of the podcast. The Chinese markets are also down about 1%. Now, when you want to look at individual stocks, because what leads up leads down, if you're looking at Apple, another doozy, down 6.7% for the day alone. Tesla losing 88 points today alone, accounting for a decline of 21%. Tesla is down 21 percentage points today alone. Recall, a few days ago, it was north of 500, and of course, this was off the back of the 5-for-1 stock split, And no, now everybody has learned the hard way, I guess. That does not make you 5 times richer, 5 times wealthier. And lo and behold, we are seeing a massive sell-off in the price of Tesla. And of course, Tesla, there was a lot of speculation that Tesla was going to be added to the S&P 500, which they were not added to the S&P 500. So a lot of, again, not the word investors, but a lot of traders were perhaps attempting to front run that news. Didn't happen. Now they're selling the news. I'm glad it didn't happen. I'm glad Tesla is not in the S&P 500. Tesla is not a profitable company. To me, that would be an insult to claim that Tesla is one of the largest companies in the world, but they're not profitable. So kudos to that committee to not allowing Tesla into the S&P 500. They're not profitable. The only reason they show a minor profit is because of all of the tax credits and the regulatory credits that they sell and all that mumbo jumbo. Tesla will be one of the poster children for this hyper bubble mania. You also have Dave Portnoy, I'm sure some of you are familiar with this name, CEO of Barstool Sports. Not a lot of sports going on, so this gentleman got involved with the stock market, claims he was never really involved with the stock market. But because of all of this mania, and sports weren't, you can't bet on sports because sports aren't being played, let's get into the stock market and let's just buy everything because stocks only go up. Basically created his own little trading group, if you will, just basically a cult following, for the lack of a better word. Davey, Day Trader Group or something like that. Davey Day Trader. Stocks only go up. Any ticker with letters in it, I'm just going to buy it and I'm going to make money. Well, during this run-up, during this rally, he made a lot of money. Well, over the past few days, unfortunately, this gentleman lost nearly $4 million. That's how quick you can make it. That's how quick you can lose it when you're of the mindset that stocks only go up. Now, he might get lucky, and this could just be a breather, and we make new highs in the not-too-distant future. Or this could be something much more significant. Much more significant, like what was witnessed in 1929, what was witnessed in the dot-com era. And again, as we discussed yesterday, a little bit of market trivia, early September was the end of those rallies. 1929 and 2000, that was it. That was the top of the market. That was the top of a counter rally. So long, see you later, down 90, 80% over the course of the next year and a half, few years, depending on what event we're talking about. So don't think that it can't happen again, because it most definitely can. And again, this is all before Election Day. All of this can unfold. This is still here. But that's Tesla, and we stated the other day from a technical standpoint, this wasn't my analysis, but this was analysis of other market technical analysts out there who were stating that $405 and $400 per share on Tesla were crucial battlegrounds. That was supposed to be strong support for Tesla. And we stated at the time, if that stock price falls through that support of 405, 400, it is quite possible that Tesla's share price could continue to fall drastically. And that's what we are witnessing here today. Microsoft gave back 5.4%. Amazon gave back 4.3%. Alphabet, the parent company of Google, gave back 3.6%. And Facebook gave back 4% to round out the day. So there you have it, folks. Some market performance, a lot of stuff that is still waiting in the wings, a lot of things that are going to be over the heads of both candidates until Election Day. The question becomes, how much discussion is there going to be of these core issues? Unfortunately, it's not going to be much, but apparently the masses aren't concerned with those structural issues until the market says, oh, yep, you got to deal with them. And that day is coming, and nobody is going to like it. Election Day coming soon. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.